everyone, welcome to the Ichimoku charts.com daily analysis for gold for Thursday, September 20, 2012. Well, a change of trend today and a candle with a lower high and a lower low. The candle that we're analysing is the second last candle on this chart. The final candle here is still currently developing, but some significant things happening with that candle, and I will discuss that soon. But just looking at the prior trading day, we had a change of trend to the upside, not supported by the buyers, and the buyers didn't go on with the move. The market tested to the resistance at 1780. We have tested up to that level on 3 of the previous 4 trading days, and the market was rejected from there strongly. The market also found support below the 1767 level, and the market has tested down below that level for the previous 4 trading days and been strongly rejected from there. And again today, rejected from the 1755 level very strongly as well. But an indecisive trading day for the uptrend, and today we've seen that change of trend to the downside. Now today the sellers have lost a lot of commitment throughout the trading day, so even though they were strong enough to take out the previous low, change the trend, the sellers have lost commitment, as evidenced by the large shadow on the bottom as they tested to the 1755 support, and they closed the market up towards the high, which means that the buyers have taken control of the market throughout the trading day, and that does set the market up for a potential change of trend to the upside. And if we look at the current candle as it's trading at the moment, we actually have that change of trend with the market making a higher high and a higher low at the moment, so that could be significant for this market. The only problem here for this market at the moment is the strong resistance above around the 1780 level, and as I've mentioned, the market has tested there for 3 of the previous 5 trading days now and has been strongly rejected from that area. So a bullish close up above that area will potentially see the market test to around the 1800 level or even above. The 1800 level will be very strong resistance for this market moving forward, so we do need to be aware of that. But at the moment this market is forming some sort of a congestion area. It's not a very well defined area. We can't really define it as a wedge or triangle, because we actually had the market make a higher peak within the area and then a lower trough, and it looks perhaps a little bit like a megaphone pattern. Megaphone patterns tend to be reversal patterns, but it's a little bit too small to be a megaphone. They tend to be larger patterns and tend to be major reversals. This could be shaping up to be something like a diamond pattern, but we don't have a higher or a lower peak at the moment. We actually have a higher trough here, so an area that's going like that, a little bit like a diamond, but not complete yet. But the significant thing is, though, that we do have boundaries to the upside, and the upper boundary here is up just above the 1780 level, and the lower boundary is just below the 1755 level. And whatever way this market breaks out and closes above, with say a bullish breakout up above, will be confirmation of the breakout from the pattern and a continuation to the upside, or a bearish breakout down below and a close below will be confirmation of it being a reversal pattern. Now we do have very strong support down below where the market's trading at the Tenkan Sen, just below the 1755 level at 1751, and then down below there we have this very large zone that I've highlighted in yellow as a strong potential support area, and then down to the 1700 round number level. In terms of the Fibonacci extension, because we're now trading within this pattern, we don't have any substantial moves at the moment, but the market has tested down below the 50%, the 61.8% levels, and been rejected from below that level, so that could be significant. And as I've mentioned, the short-term dynamics are now actually favouring the buyers, with buyers taking control of this market, so it did set the market up for that change of trend, which we're actually seeing at the moment. Whether it continues to stay that way remains to be seen, and we do need to watch the market as it develops throughout the trading day. And just looking at the Fibonacci retracement of the prior uptrend, and here once again we see rejection from the 50% and the 61.8% levels in a very strong way, and that also has set the market up for that change of trend, with the buyers supporting the short-term dynamics, the sellers losing commitment. In terms of Ichimoku, a bullish market in all three time frames by trading above the cloud, above the Kijun-sen, the Tenkan-sen. The Kijun-sen is pointing up quite sharply, reflecting some upside momentum that we're seeing in this market. And looking at where the market is trading away from the cloud, it is significantly away and does suggest that there is potential for the market to come back. But if we're looking at this very strong second time frame uptrend, and the market really hasn't made any inroads into that trend in this congestion area, the sellers really aren't showing any major strength by not trading down below the 1755 level. It does look as though this will be a continuation pattern, or more likely to be, basically because of where the market's trading in relation to all of these indicators. We have a bullish market, so if we do see a bullish close up above this 1780 level, 1782 level, then we could potentially see a strong continuation of that trend to the upside and a test to the 1800, and then possibly a test to higher levels, even to the 1819 or 1848 levels.